to Cousin Betzy YouTube channel, where we're talking about all things raising private
Private
capital,
capital.
whether it is for your real estate business or buying a business, whatever it is. I'm your host, Kalisha, and look at my host, my gorgeous co-host, Betzy.
Hey guys, hello. How are you guys doing today?
I hope you guys are having a fantastic day. It's a beautiful day here in Florida. Gorgeous. The sun is out. Buns are not out, but the suns are out. And summer is approaching, and I'm in Florida, if you guys don't know, and Betsy is in.
Georgia. So it's awesome summer weather.
Oh man, for everyone who's new to our channel, we basically are providing a space where we're bringing on experts, investors, entrepreneurs to share their insights as it relates to how they're raising capital for their business, sharing success stories, giving us tips, everything. So we're just so happy to have this space and have you guys watching or even listening to this.
Yeah, we hope we are bringing value to your lives or insight or inspiring you in some way. We that's our goal, That's our goal here.
For everyone that's new, like this guest that we're bringing on, it's whoo, Momo. He's like backstage and ready to go. But this person, he gets super duper creative with his approach to buying real estate. And the great thing is, majority of the funds that he used, it's private capital. So I think once you get hooked with raising private capital, like you don't want to go back to the traditional funding until you start doing extremely bigger deals. But even then, the way how Maurice gets super creative with structuring deals and using private money, it's
Yeah,
phenomenal.
that's what I was gonna say.
So he's gonna be dropping a lot of gems.
I'm really excited about this one, seeing his strategies. He is a go-giver 100%. When I started my real estate journey and I had to pick what avenue I was going to focus on, Maurice actually reached out and he was like, "Hey, I can talk to you about what I do," which is amazing. I just love his strategy. I think it's super valuable. People should be doing it way more often than people talk about it. It's just
He's always
amazing.
he's always I love that you mentioned the go giver because he's always available. So I met Maurice when I joined Amy Major Raising Private Money Mastermind. And there were so many, I started learning about creative deals. Like I could always be like, okay, I'm stuck. This is where I'm stuck. Can you help me? And he's always available to be like, let's hop on a Zoom and let's figure this out. So he has like a phenomenal go-giver mentality, and that just what makes Maurice. So guys, help us welcome Maurice Sams.
What's good, ladies? What's good? How you doing?
On. How
Good,
you doing?
good, man. Just doing real estate, what we love, right? Every day.
Right? But before we even dive in, like let's Betsy,
Yes.
disclaimer.
For our podcast listeners, the following information is for educational purposes only.
Mhm.
Please do your own diligence. Look for those professional CPAs, attorneys. We do not provide financial, legal, or professional advice. Everything that we talk about is from our own experience. If you do need to talk to a professional, let us know. We have them on our show. So if you want to even talk to them live, Money Mondays is live on Mondays. So
Exactly. But Maurice, welcome to our channel. We're so happy to have you here.
Yeah,
Um, this is gonna be great. I'm super excited for all
yeah,
this.
yeah, yeah. I appreciate y'all having me on. It shouldn't have took this long for y'all to get me on, but it's all
Man, because we were trying to do this interview at the conference in April,
yeah, yeah,
and
yeah.
it's just like, you know what?
It was
It's,
busy.
it's busy, and then they always say nothing happens before it's time.
That's a true story.
that's true.
True
Nothing
story.
happens. But for those who don't know Maurice, also guys, he is you know what? Let me give a going. Let me give Maurice the chance to introduce himself for those who don't know Maurice Sims.
A quick introduction and like what you specialize in.
Yes.
Okay. All right. Well, like they said, my name is Maurice Sims, CEO and founder of WCS Property Solutions. I'm in my fifth year of investing. And we do something real unique in this space. We specialize in buying single family homes, fixing them up, cleaning them up, and putting families in them. And we help families become homeowners in a 2-year period. Everything we buy is creative finance, and we don't use any banks or lenders when we buy.
Mhm.
And we just build a system, a program that helps middle class, hardworking families become homeowners. That's our passion. That's our goal. That's what we focus on. And that's structured all around them becoming homeowners. So that's in mind when we buy, when we do everything that we do in real estate is structured
Yeah,
to make sure that a family can become a homeowner.
man. I think that's the part I'm super excited about for you to share
Yeah.
about the program that you have developed for these families as well. But I'm gonna just dive right into the money part of it.
Yep.
When did you realize that I need to, in my real estate career, I need to learn how to raise private capital?
Mm, I don't know that that ever happened to me. I don't know if that moment ever happened for me personally,
Yeah.
because I always did creative real estate, creative financing, right? Like, I always could structure a deal that worked out, right? So I never really thought about private money until I ran into Amy and Jury, right? And heard her speak and talked about her processes and stuff, and for some reason, I just was attracted to her personality and her energy, right? And so I went ahead and joined it. And then that's when I realized how it could change my business, because my business before then was I was looking for a seller. I was looking for a particular seller that would let me buy the way that I want to buy. When I
Yeah.
added private money, it allowed me to start looking for homes. Instead
Mhm.
of looking for sellers, I could look for homes in certain areas that families wanted to live in. So that's what changed my business model, private money. But I don't know if I ever thought that I would look into. I heard it, you know what I mean. I used to hear about it and things like that, but like I never looked into it. I was super just focused into finding a seller.
So, how do you structure your lenders when now that you changed your strategy? How did changing your strategy change the way that you structure how you pay your lenders and how you get them in there?
Yeah, so for me, it's all math, man. It's all math. It varies, depending on the deal, right? Like I said, my ultimate goal when my family's ready to buy this property is that it's either at market value or below market value. So when I structure a deal when I'm buying it, I have to make sure that when I'm all in cost is at market value or below, because those are the people I'm trying to help, right? They had enough getting short into the stick, and they have all these programs where they mark the prices up, because they need help or they need some type of program to get into home ownership. And I didn't want to offer that.
Yeah.
So when I go in and we structure a deal, I just use the math on how I structured it. If it's a sub two owner finance, lease purchase, however we bought it. And then what's the max I can give my private money lender? If I got to come in with equity to the seller, X amount of money, or we have to fix it up, whatever that number is, I run it into a calculator and I just keep pushing the number up until I can get the highest interest rate that I can give that private money lender. And then once I have that highest amount, that's what I put out and advertise to my list.
So you mentioned the subject to. What I want you to explain is, so you get a subject to deal. And
Mhm.
for those who don't know, buying a property subject to, meaning you're buying a property subject to the existing mortgage payments.
Mhm.
The mortgage stays in the seller's name. You're now just going in and making payments on behalf of the seller. In a case like that, have you ever, one, bought a house where the seller is in arrears, right?
Mhm.
And two, how did you, when raising the capital for that particular deal, what was your exit to repay that lender?
Yeah, yeah. So I have bought one in the rears. That happens quite a bit. That you get them out of the rears and take them over. Subject to those are pretty easy deals to do because they're in distress situation. Just making them, it's about making them feel comfortable with you taking that over and showing the benefits to them, right? Keeping their credit straight and things like that is a big plus for somebody who's behind, and the alternative is a foreclosure, right? So yeah, we do that quite a bit. And then structuring it is whatever that amounts behind, we want to raise that to bring it current, right? And then we probably have to go in and do some things to the property. So some rehab, holding costs, we kind of combine all that together, and then that's what we raise at that point. So it's all math, right? It's just, what is this house worth? What do I need to bring to the table to get this thing ready for a family? What are my payments every month? And then like I said, I just keep on moving that interest rate up until it's an amount that I'm comfortable with. I have certain standards that I look for as an investor, right? The number one thing on a subject too is I want a 500. I like 7, but I'll do 500 principal pay down on a subject too. Anything less than that, I won't buy a subject to. I don't believe that every subject to deal is a good deal because of the type of loan it is. It may not work out, and some of them don't work, period, right? So that's one thing I look for. And then on my monthly spread, I want at least 500 or more on my monthly spread. So when I'm putting all those numbers in, I said, okay, my mortgage that I'm taking over payment is this, my payment to my PML is this, and I keep pushing that number up until I get my cash flow, right? Let's say it starts off at $1,000 cash flow. Well, I can keep increasing that interest rate to my PML until I get down to 500. Then I know that's my interest rate that I will offer that PML in that particular situation.
Okay. So even with going into that, so you get the funds from the PML.
Hmm. Hmm.
And let's say it's 12%, it's $50,000, for example, $50,000, 12%. How do you determine how long you need that money for? And when a lender asks you, okay, how do you pay me back because you're purchasing this house subject to, how do you explain that portion of
Yeah, yeah. So we always do 36 months with all our PMLs because my program is 24 months with my families. So I want another year just in case that family doesn't get to the finish line and we have time to, maybe we have to put on the market. We have other options. Maybe I go get a DSCR loan. Who knows what I get out. So my PMLs are always 36 months. That's
it?
what all our deals are, right? And then I can show them when I talk to them the cash flow, the spread in there. So
Yeah.
one thing that gives me a lot more versatility is because of the way my program's built, it's not based on market rents. When we put a family in there, we don't base it off market rents. We base it off of what their mortgage will be, right? So let's just say it's a $400,000 mortgage. And if they were to buy today, I would use 6.25, and whatever that value tells me, that's what their monthly income is. That's what their monthly rent is.
Yeah.
So that's usually $1,000, $1,500 more than what market rent is. So I have enough spread there to cover my PMLs monthly and make sure they get paid on a monthly basis.
Oh, that makes cool. So I know we're familiar with your POTS ownership program. And everyone may be wondering, what is this?
Yeah, yeah.
How do you find a PML to stay for 36 months? So first, like, tell us about that program, how, like, an overview about it, and
Yeah,
And also, what inspired you to get into this? Like, I want to know what
yeah.
inspired you.
Yeah, what inspired me, man, was I had, just like all of us, when we get into real estate, we see all the power of real estate, and it's interesting to us. And so when I started to see it, and I was lucky enough to be a homeowner at a young age, I became a homeowner, but everybody around me wasn't. I mean, even some of my family members, some people older than me in my family weren't homeowners, and I was just like, okay, I'm in this. I want to get into this real estate space. I understand how powerful it is. I understand you can flip and you can own rentals, but there's got to be some way to help these middle class people, man. You know what I mean? That get it from both sides of the fence to help them become homeowners, because there's a ton of hardworking, make good money that want to own a home, but in their mind, it seems like it's so far fetched, right? It's like something they'll never get there. So I was just determined to figure out a process. I was determined to figure out a way that I can do this with all the tools that's in this business and all the resources. There's got to be a way to do it. And so that's what we created. That's what we put together, as a way to be able to do that. And so the way that it kind of works out is, most of the time, most people, the reason why they can't be a homeowner is usually because of credit or down payment. That's usually their things, right? That's the reason why most people will tell you, right? And so we wanted to create a system that was going to be able to kind of help with both those things, help eliminate both those things, or at least make them a stronger borrower. So what we do is a number of different things. The first thing we do is, obviously, we want their commitment to our program.
Yeah.
So the first thing is they have to make enough money. There's nothing I can do if they don't make enough money to be able to buy a house, right? So no matter what market we're in, we're always shooting for that median price, because that's just the price of homes, right? So I can't do anything about that. So we're looking for people that can afford the medium home price, right? If you can't afford the home median price, then you really just can't be a homeowner right now. There's nothing we can do about that, right? So we look for that, and then we just want a little bit of down payment in. So most of the people we work with are first time home buyers, right? So they're going to need 3.5% down. So we like 1.5% down into our program, right?
Mhm.
So that's what we kind of want to get in. When we get that 1.5% down, that's a credit. That's a credit to the purchase price. So technically, that's income to the company, because we're just giving a credit on the back end.
Yeah.
right, of their purchase price. We lock down the purchase price at the beginning of the program. That's what a lot of investors don't do in rent to own. They change the price at the time that the family's getting ready to buy the property. Well, why that makes it so unsuccessful, because that's a moving target. How can you give someone a moving target and say, hey, we want you to buy the home from us, but we don't know what we're going to charge you. It doesn't make any sense. So we lock that price down. The reason why that's so important is because if that property appreciates, which we always know it does, in some markets it doesn't, but most of the time it will increase in value. They capture that equity. And the importance about them capturing equity is now the bank is not lending dollar for dollar. The reason why a bank wants a down payment is because that gives them security, right? If you have to come in with 3.5%, now if we have to foreclose, we can make that back because it was your cash, not ours.
Yeah.
So if we have equity at the end of the deal, well, now the down payment isn't that big of a deal.
Mhm.
There's $40,000 equity. Well, now the bank isn't caring about down payment as much, right? So that's important. That's an important step. Now, if we eliminate a down payment as being a problem for families, what's the next thing is credit. Credit, the only reason why a lender uses credit is because they don't know you. You're a stranger. You get a
Yeah.
chance to go sit across the desk from a stranger, and they got to get to know you, and they pull credit. They have no idea. They don't let you tell your story, nothing.
Yeah.
And the power of our company is we get to sit down and let you tell your story. And more importantly, we're that third party that can advocate for you, right? We can go to the lender and be like, okay, listen, this is what they've been doing. So how we eliminate credit is we make your rent what your mortgage is going to be on
Um,
at the time that we started, right? So whatever the interest rate is, we use that number and we say, okay, the mortgage is going to be 2,500, 2,800. This is what you need to pay every month and pay on time, because this is how we're going to prove to the lender you can afford this property.
yeah.
Not the credit isn't that big of a deal, because when I can show them a rent roll for 24 months that you never missed, and you paid exactly what probably the mortgage is going to be, because we add escrow and everything, right? So it's going to be pretty close to that. Unless interest rates go down, what happens for that family? They save money.
Yeah.
Right? So now credit isn't that big of a deal. So now these numbers that usually are a big deal to most people and keep them from becoming a homeowner, we created a process that kind of helps eliminate that, right? The other big thing we do is we bring the lender in at the beginning of the process. So when we have an open house and we figure out our top 5 applicants, we send them over to lenders that we use, 2 lenders that we like to use in the markets we're in.
Yeah.
And then they come back and say, okay, they didn't qualify, but these are the reasons why. The most important question that I have to that lender is, if I check all these boxes, you cannot tell me that you will not lend them to this, get them
Yeah.
to the finish line. And they say, we agree. So now they have already committed, right? They've already told me the reasons why. Now it's my job to make sure we check those boxes. So we go back to the family member and we create a plan for 24 months to make sure we check all those boxes, right?
Man, this whew.
Yeah.
I know this is like it's mind blowing, but at the same time, for persons who know, just gonna break it down for all the newbies. If you're familiar with wrapping a note, so you have some person like Betzy said this to me yesterday. You have like persons who buy creative deals, they wrap it and sell it to a homestead buyer. And then that's it. If that buyer misses a payment, then you, as the owner who got the house up too, you can foreclose. But I love your twist with it,
Mhm.
is that you are not just leaving the buyer and hoping that they will mess up. You're setting them up for success.
Yeah.
And
Yeah.
you have the lender in place. And that is genius for you to have the lender at the beginning. So they're like doing the pre-check for you.
Yeah. Yeah. And it's a funny thing with that. When I started looking into this and creating this for families, I thought the lender was going to be the hardest thing, right? I thought the lender part of it was going to be the hardest thing to find and figure out how to get that done. It's actually the easiest thing, because what I found out, for one, this is one thing I'll tell you guys and everybody listening, is in this space, if you are 100% clear about what you want to accomplish, you will accomplish it. Because as I was going through creating these steps, if it was a lawyer, a title company, a lender, whoever I was talking to, I wasn't going into these meetings hoping that they would, or asking if they had someone. I'm telling them, this is what I'm trying to do. Can you help me accomplish this?
Yeah.
And I got through a lot more people a lot faster, because the ones who were like, no, I could just move on. I didn't have to give the spew. I didn't have to say how the program works.
Mhm.
It's like, no, we don't do that. Cool. Because I know somebody does, right? Clarity is huge for you as an investor and the things you want to do. and what you want to do in this space, because it helps you make all the decision. What podcast you want to follow, what coaching program you want to do, right? Who you want to follow, right? When you're clear about how you want to help and who your customer is in this space, right? Who's your end buyer in this space? What you want to do, even if it's a flipper. And do you want to do high end, right? Or do you want to do median houses, right? Or do you want to do low income houses? That's your customer, right? So when you're super clear about that, you're targeting those type of houses, you're advertising those type of houses. It makes every decision in this business faster, and you can do it better and faster because you're clear. Because this space is an ocean. We know that there's so many different things. You know, everybody that's following you guys right now probably has listened to every speaker and thought, I want to do that.
Yeah.
Right? Like every week they're like, oh, I want to do that. That's what I want to do, right? Because this space has so many good things you can do in this space. But it comes down to you. What do you want to do? Why are you in this space? Well, we know we want to make money. I get that. But like, why does it attract you? Why does providing housing for somebody attract you? Right? And when you really dig into that and focus on that, it's going to clear up everything else for you. So for me in this, when people I talk about, they're like, how did you put that together? I was just clear about what I wanted to build. So when I was going and talking to lenders, I'm like, listen, what are the reasons why most people don't get lending? I make them give me the answers.
Yeah.
Oh, it's this, this, and this. Okay. So if I check all those boxes, you shouldn't have any excuses to get these people funded, because you already told me the reason why they can't. So if I find a way to make sure they all get covered, all the boxes are checked, you shouldn't be able to say that you won't lend to them. And that's how we created. That's how we tied them into it. So they're tied, the lender's tied into it just as much as I am, right? And so that's
you're bringing them money, like you're bringing business to the door.
Yeah, because what you have to understand is the people, the families I'm bringing them, they have no way. These families, these are not clients for them.
Yeah.
These people will never come to them because they think they never can buy a house, right? The other thing that I realized was that there are a lot of programs, financing programs, maybe they're government funded programs or other things like that, or some banks just have them that are for these people. But the problem is they can't advertise for them. They can't advertise them because it would be considered discrimination in some ways, right? So they need someone like me almost bringing these people to the forefront, bringing them and introducing them to these programs. So that's why it wasn't that hard to get the funding. It was more, the hardest part of this, the whole system and the whole home path to home ownership that we do is trust. That's the hardest thing.
And
Right.
and I know that first time that we talked about how you set up your clients for success with the funding part. Can you talk a little bit about that?
Yeah, the funding part for being private money lenders.
Of setting your clients up for success, like how you make sure that your clients are all the way set up in a first time buying situation, and that you do have them qualify for that.
Yeah,
mortgage
yeah.
at
I
the
mean,
end.
it's pretty much like I said, how we build it out, right? We sit through them and we vet through that, right? We vet through them and make sure they kind of hit these standard things that we kind of looking for, right? But it's a weird thing. Like we do an open house. So when we get done with a property, we advertise that house on social media and do an open house, right? And so what happens is these families come out, and every time I know the buyer when they come through the door. You'll know their body language, you'll know their energy, you'll just know, like, they're like, I've been waiting for something like this, like, I'm ready to go. You won't have to convince somebody. It's similar to a seller, right? You know, when you have a seller that's going to sell to you, you know it because they start reaching out to you, they start following up with you. What's going on? Like, you ain't seen that contract, right?
Yeah.
The people who ain't sold on you, you got to kind of hunt them down. You keep poking at them, you keep trying to figure out following up, right? But when they're ready to sell to you, it's the same thing. You know who it is because they just needed an opportunity. They just need an opportunity, and they realize the type of opportunity it is.
When you go to private money lenders for the money, for these projects, right? And you pitch what you're doing. What are some objections, if there is any, when they're like 24 to 36 months? Like, what are some of the objections? How do you overcome that? Or even if there's no objections, what are the positive reviews that they have to say about it?
Yeah, yeah. So I have an advantage when it comes to raising private money because I'm investing with a purpose. If you have a purpose,
Ooh.
people always want to be part of a purpose.
In capital, investing with purpose.
People always want to be a part of a purpose, but don't get it twisted. They want to make money.
Yeah.
You got a purpose and they're not going to make the money. Be like, hey, that's very good for you, but count me out, right?
Yeah.
Like they want to make money, right? So if you have a purpose in this space, man, it's easier to get people to want to join in there, and then they feel like they can make double digit returns on that. Okay, I'm in for it. So that helps me. That helps me when I'm saying I want to do 36 months. But the biggest thing for me is when it comes to private money lending, I do the same thing I do with my families. I try to make sure that I provide value first and give a sense of direction. So when it comes to my private money lenders, I like to sit down with them on the very first phone call. I ask them, what are they investing right now? What do you do investing right now? Let's say they don't do anything investing. I said, okay, well, why do you want to invest in real estate? They probably heard it. They know, everybody kind of knows real estate's kind of the thing to kind of invest in to build your retirement or get to your end game, right? So that, they'll say something like that, like I've been wanting to get into it, I just haven't been able to do it. I said, okay, let's back up. Let's back up. What do you what kind of money are you looking for when it's that time to check out and enjoy life the way you want to? What does that look like? What does that money look like for you? Right? And they're like, I don't know, never thought about it. I said, okay, so this is the first thing we need to do is I need you to think about that number. I want you to think about what that monthly passive amount of money is that you want. And I want you to encompass everything. I want you to encompass if you want to buy a new car, if you want to travel, if you want to go see the family, whatever that amount needs to be, I want you to figure out that amount. And then the second thing I want you to do is, when do you want that amount to kick in? I want you to put a date to that amount. So my first conversation every PML is exactly that conversation. We follow up a week later and we review that. What was that number? I was 10,000. When do you want that? I want that in 6 years. Okay. So now we know what you want passively and we know when you want to be able to do that. So now we can reverse engineer that and talk about what do we need to invest in so that I can get that 10,000 passively every month. Right. And so that's where I give them the guidance because I tell them none of my deals may work for you, but I need you to know that a deal is good for you, right? I can send you 14 deals and I can tell you every one of them is good, but is it a good deal for you, right? And it's the same thing as us investors, wholesalers, or wherever we get our leads from. How do you know it's a good deal for you? If you're not clear about what your passive you want to make per deal or what you want to make on the flip, well, then how you know it's a good deal for you?
Yeah.
Right. So it's for everything along the way in real estate. So that's what I do with my private money lenders is we start there. We start there with figuring out where they want to go to, right? And then giving them the education and that power to make them a smart investor, passive investor, right? Now I can send them my deals and they can determine what to do. But I've already given them value. If they don't work with me or not and go forward, we're not, because you have to understand if somebody wants, $30,000 in the next 10 years is a lot different $30,000 in 2 years. Don't you agree? Like we got to get going. You need that in 2 years. We got to start putting in work, right? But if 10 years, we can get there. But 30,000 may not be my strategy. You may need to go into multifamily. You may need to go into syndications. Understand what I'm saying? Like I want to make sure you understand that this number that you say you need to be looking for different type of investments because my double digit over 36 months ain't probably going to get you there, right? And so that's the value we give the PML. So when you start to do that, when you start to look at that way and treat them that way, when they start to see your deals, they may just do it with you simply because they have clarity.
Yes. Woo. Woo.
I love the way you paint the picture.
Yes. Yes. Especially if you're a lender or you're thinking of getting into lending. Maurice touched on a key point, and with our interaction with raising capital, we realized too a lot of lenders they don't know what they're looking for, and if they don't, it's harder for them to partner with us on a deal because they're not clear. They just know they have the money, but they're not clear. So the fact that you help them to get that clarity, it's key, and you're basically making your life easier for them to partner with you on a deal, or even if it doesn't work out, they can always refer somebody.
Yeah. Yeah. I mean, it starts there. It starts right there to help them kind of figure that stuff out, man, because it'll benefit everybody across the board. But the other thing too that I think we make a mistake when we're raising private money is that we assume if someone is in the stock market, or they're in the financial space, that they understand real estate and how the returns, and that's not true. They are in their space. They live in their space. They're good at a financial advisor, but does not know that mean that they understand real estate. And so I think that the confidence in you in this space, that you're in real estate, you know real estate, and you understand how it works, take that into every conversation, because just because you think they have a net worth or something, they built that in financing, does not mean that they know how real estate works.
Yeah.
And so you don't people get scared of that. They get worried about people with a large stock for portfolio, or their net worth is high. You don't know how they got that net worth. They
Mhm.
might have got it inherited. They may have, you know what I mean? It might have been other strategies. It may not have been through real estate. So take your knowledge and have confidence in that, and then teach them.
Yeah.
Teach them how we get double-digit returns. How come this investment is protected, secured, and insured, right, by an asset that is not there's not another asset class that happens in, right? But you have to be confident and understand that and share that with them, and so they understand what that looks like from a paperwork standpoint to a number standpoint.
Man, like, and even one approach that we take too, and when we're vetting for anyone who will see our stuff online and be like, we want to partner with you. We do our initial calls, and before we even pitch them a deal, because we want to get an idea, like, where's your headspace at?
Mhm.
Mhm.
Have you ever done a deal before or lend on a deal before? Because you don't want to start using technical terms, as you said,
Mhm.
and they're a complete newbie. And this is going to be their first lending opportunity. You don't want to overwhelm them. So I
Yeah.
just really love that approach of you, like, giving them, helping to give them clarity. And
Yeah.
I'm gonna take that
Apply that.
Always.
uh,
Yeah. Always.
reminder that we really need to do that. That's why you should always be raising capital, and not just when you have a deal. Like,
Yeah.
Always.
always.
Always. Yeah. Yeah. I mean,
So, Maurice,
Mhm.
what would you say was your biggest takeaway? I guess the biggest lesson learned.
Since you started.
Yeah, lessons since I started, a couple, and there's always a bunch, right? Um, always a bunch. But one of the main ones was um, like not tying a lender at the beginning. I've only had one family not get to the finish line, and that was my mistake because I didn't tie them with the lender. I let them tell me, "Oh yeah, I'm working on it. I have a lender," and then we got to the end of the finish line, and they didn't. That lender just had like a preliminary, never even pulled credit or nothing. So that was one of my big things was like, okay, I need to pull lender at the beginning with these families and tie it all together so that all parties are working towards the finish line together. That
Wow.
was a really, really big lesson. And the other one was like just having confidence, man.
Mhm.
Just having confidence. Like we spend a lot of time listening to podcasts and audio books, right? And reading books and all these things, man, and learn all this information, but we just don't have the confidence. We you know what I mean? We don't have it. And some of it comes from experience, right? In order to be an experienced real estate investor, you have to have experiences.
Yeah. Yeah.
And you have to just do it. You have to just do it. You know what I mean? And you'll learn things along the way. You don't have to know everything. So when I first kind of started, I felt like I had to have all these things together. I had to have a website. I had to have business cards. I had to have, all these things to make sense. You know what I mean? And I've probably talked to each one of you guys separately where you weren't doing something because you was waiting for this. And I'm like, just do that shit, right? Like it doesn't matter, right? Just get it done, right? So, I mean, I talk to investors who won't even put in an offer because they don't have the EMD,
Mhm.
right? So they're like, well, I don't really want to get leads because I don't have the EMD. I've done over 60 deals and I've never put down an EMD, right? EMD is something that realtors talk about, and we take that as that's something we need to do, but it really isn't, right? Like it isn't that big of a deal. Do you care about me getting to the finish line, or do you care about me putting down $500?
Yeah.
Like, or do you want to sell or not? Or are you just trying to make $500? Like,
Yeah.
you know what I mean? If you want to make $500, I just give you that now and we all walk away, right? Like that doesn't. We're in this for another reason, right? So, it's that, man. That was a mistake of like just not getting started. I educated myself. I had all these tools. Maybe I didn't know how all the dots connected, but I
Yeah.
had enough information to get along, right? And so that was one big lesson that I had. Another one too that I want to share with people is we go to these events, we meet people, and we get their contact information. But when we have issues, we don't reach out to them, right? You built this network around you, but then you have an issue and you don't call your network,
Yeah.
right? And that was a mistake that I did at the beginning was, I didn't ask questions of people that I already built relationships with that I had their phone number in my phone. I didn't call them and be like, what does this mean?
Yeah.
Right? Like, I don't know what this means, right? What is a slide deck? I don't know what they're talking about, right? Because in this space, man, a lot of these questions are small little things, but the small thing will turn into a day, will turn into a week, and turn into a month that you don't do nothing, right? And so my advice is, man, if you have the network, if you go to these events and you meet people, you meet cool people, you like what they do, and you get their phone number, then use the phone number, right? And I've told each one of you guys this just from talking one on one. Just call me because a lot of times it's probably a 2 minute answer for me. There's probably a text message answers for me.
Oh
Like
yeah.
this makes sense. All right, send me the deal. I'll look at it. Hey, it's because of this, and we're off and running. It doesn't take an hour of my time all the time to solve a problem, right?
I,
Sometimes it's a couple minutes.
I testify to that a lot where I'm like, I don't want to call Maurice. I feel like I'm bothering him, and then you just like just pick up the phone, and then whatever solution that he provides, it takes maybe like less than 5 minutes, and you're like, oh, I can continue.
Yeah, I'm good to go. I wasn't going to do nothing today, but I called him at 10 o'clock. Now my whole day's packed again because I got past that hurdle, right?
Yeah, and then you just keep the momentum going. You're like, oh, it was that easy.
Yeah, yeah. And understand that like not everybody's going to be that. That's fine. But the whole point when they say your network is your net worth, is because that network will pick up the phone. If you have someone in your network that won't pick up the phone, won't respond to you, then that's not your network. You understand what I'm saying? Then delete that number and find the people that's going to pick up the phone because that's what makes a network powerful is
Mhm.
the people are going to pick up the phone, right?
Yeah,
And going to help you become better. It isn't just having all these big names in your phone, but they never really answer you back. Well, what's the point? That ain't your network,
yeah,
right?
that's it.
Right.
Exactly.
That's literally it. But man, like this is good.
That was
It's so good. We touch on doing the due diligence portion of qualifying your private money lenders, qualifying your buyers, have different exits. So your lender, we may not have said it directly, but if you guys listen, like you see how Maurice ensures that if he has a private money lender, their money is protected. They have a secure, like what is their exit to get their money back? And that's the fact that he now has that relation build that relationship with lenders. So he has a strong exit ready to go. It's not like, what if I don't sell this property?
and
What if
he structured it that way. Super, super
yeah,
structured.
Yeah.
He has
It,
contingencies in place.
Yeah, yeah, it's
Amazing.
like, I mean, I think that every investor should have 2 exit strategies always. 2
yes.
exit strategies always, no matter what your niche is, right? What your strategy is, you should have 2 ways you can go with it. I believe that with every deal that you do. But the way that we structure it, because like I said, we get a little money coming down from our families, we got a big spread that in a 2-year period, I'm gonna probably make some pretty good money. So even if I have to sell that property and just cash my PML out and pay off the underlying debt, I'm okay with that, right? Because I've already made some money on this one particular deal. It's not like I'm out putting for a flip and then it's got to sell at the end and cash everybody out and get that done. I'm not saying that strategy doesn't work and it's a fine strategy. People made a lot of money doing it. But for me was I wanted to build a company for one that my family could be part of, right? And that we could grow and scale. And I wanted to find a strategy that would allow us to get all 3 paydays. So in our what we call our path to home ownership or rent to buy program, we have 3 paydays structured in it. And it's kind of all 3 main strategies rolled in one, right? We get a family to come in with 1.5%. That's like a wholesale fee,
Yeah.
right? We get a spread that's usually 700 to $1,000 a month. That's higher than most buy and holds because average buy and hold is usually $300, right? So we get that landlord money throughout the course of the deal, and at the end, when the families buy, you get that lump sum like a flipper, right? So all 3 strategies. So by having all 3 strategies or paydays in our strategy, it allows us to scale and it allows us to grow because we kind of have, a lump sum to keep the business going. You get passive to be able to pay monthly. So you get that lump sum at the end to be able to put into marketing or do those things that you want to do.
Let's go.
Right.
Man, can I like
I know.
Yeah.
this is one of those episodes where like when you're reading a book and you're like, wait, what? Let me go back.
Yeah.
It's gonna be one of those episodes. So if you guys are watching this, listening this, you're gonna have to re-listen this
Yeah. Yeah. It takes a minute to kind of wrap your head around it and stuff,
now.
but it's a good strategy and not that many people use it. You know what I mean? I go all across the country and I'm usually the only one that kind of does something like this, which is cool, but it doesn't mean that like I'm happy with that because I feel like if there's more investors doing what I'm doing, that should provide more home ownership for people.
Imagine if you can franchise this, right?
Yeah, I've heard that a few times, but you know,
Oh,
clarity, clarity. We talked about that, being clear about what you want to do. When I started this business, I wanted to build a family business. that my family could live off of and change the way that they see real estate or what real estate does for them. Until I do that, I will not do anything else.
For one, if you can do a franchise with this, like, because you're building the system, and now
Yeah.
copy and paste. Who wants it? Here it is. Here's
Yeah.
the structure. Here's the flow of it. Ooh, I can't.
Good choice.
Yeah.
I thought about that too. Yes. Oh my gosh. I think. How can people connect with you, Maurice, if they are interested in doing what you're doing? Yeah, I know you do. You do connect with people that are just starting out too.
Yeah.
So
Yeah. I mean, it's social media, man. WCS Property Solutions is the best place to kind of get a hold of me. There, like on all the social platforms, it's the same name on everything. So they can kind of get a hold of us there, man. And I wouldn't say that you can pick my brain, but you can ask some questions and help you out
Question.
of some situations.
Don't just like, how did you get started? No, do not ask that.
Yeah. Yeah.
you can come watch this.
Yeah,
Yeah.
that's it.
Yeah.
That's it. But no, thank you, Maurice. We're so happy to have you on our
Yeah.
channel, dropping all these gems, your journey, your strategy, how you're raising capital, investing with purpose. And we're so happy to have you here. Guys, whatever feedback you have, if you like this episode, comment, like it. Don't forget to subscribe as well. Let us know what you guys think. And we're so happy to have you, and hopefully we can have you in another episode soon.
Yeah,
Like,
you know what it is.
start having a franchise.
Whenever you need me, you can have me plug in. You know what I mean? We can talk about any strategies, you know what that is. But I just want to say, before I jump off, man, like I've met both you guys. We both were first starting, man. So congratulations on how far you came. You know what I mean? I see the work you guys put in and the commitment to it. You know what I mean? And so, I mean, it's to the point to where like I don't even like raising money now. I just rather send it to you guys. So congratulations.
And
Congratulations.
that's how we collaborate as well, guys. It's like we've started out doing everything, and then when we found our niche, we kind of like, oh, this person is focusing on that person is focusing on that. Let's work together now. Is it?
Yeah, because that's an important thing in it when you're growing your business or in this stage. We have to learn everything to get our head wrapped around it.
Yeah.
But then at some point, you know what I mean? If you want to have a business, you should be firing certain parts of your business that you do yourself.
Yeah.
And so, I'm kind of at a point right now where raising the private money isn't, you know what I mean? There's other things I could be doing. So, I found some teammates to kind of just push off to them and say, hey, you guys raise it and let's just get it going.
That's the definition of why when you guys hear that the wealthy people keep things in their circle. This is our circle that we're building.
Yes.
We're building this circle. But thank you so much for being on our show. I'm your host. I always forget my name. Carter, and my gorgeous co-host Betzy. Our handles are @at life with Betzy _Kalisha Carter. Maurice's handle it is in the description. But let us know what you guys think. Thank you for tuning in, and we'll see you guys.